You try and help people and open their eyes, and you're just a conspiracy theorist and a tinfoil hat nut job. Yet everything I have said publicly, by and large, since 2019 has come true. Do I take joy in that? No, actually, I'm kind of frightened by it. It's when I'm sitting alone late at night thinking like, how the hell did I get that right? I don't even know, to be honest with you. But I have been right. I have been proven right. And the worst part about it all is that you wouldn't even know I was proven right just by reading the mainstream or listening to the mainstream. You have to take a step back and look and say, yeah, that is right. It has happened. It is fact. It is real. It is law. I don't know where I'm going with this other than to say I don't think most people have a snowball's chance of hell in walking away from this. In fact, he or she who loses least in what's coming will win. And that's all of us. We're all going to lose in this, whatever this is.
Hey guys, welcome back to Capital Cosm. My name is Danny and I'm a data scientist, and today we have Andy Schectman back on the show. Andy, fan favorite. Thank you so much for coming on, my friend.
Danny, good to see you, brother. It's good to be back. Man, the world is spinning faster and faster. And I've always noticed that in finance and economics, there's great volatility before a blow off. And I'm wondering just silently as I'm talking to you here now, like, is there great volatility in human nature, in society before some sort of a big event? I don't know, but everywhere we look, every single day, there's something new that when you and I were kids, it would happen once every, couple times a year. If you were lucky, it would make front page news on every paper in America, on every news channel in America. And now it's just here and then it's gone. And, it's almost like you can use the first assassination attempt on former President Trump as an example. I mean, it's just gone. Like, where did it go? What do we know about the kid? Why? All of that stuff just gone. And all of the things that we see just kind of, they're just here and then they're gone. And the effect that it has is constant spinning, this constant drubbing of stimulus, if you will. I don't know, man. It's a crazy time. It's good to be here with you to talk about it. But yeah, I think as the Chinese curse goes, we are living in interesting times. And something tells me as we get closer to this big meeting 6 weeks from now, 5 weeks from now, at the end of October in Russia, and then, of course, the election 4 weeks or just 2 weeks later from that, next 6-8 weeks are going to be insane. And it's good to talk with you about it. But yeah, it's crazy times for sure.
Yeah, definitely no shortage of things to talk about, Andy. But before we dive right in, I'd like to remind the audience to give us a like and hit the subscribe button if you're getting value out of these videos. Also, be sure to check out our Substack for the full portion of this interview you won't find on YouTube. And also, if you guys would kindly leave a comment down below, let us know what you think of the interview at the end of it. I would really appreciate it as well. So, Andy, let's just dive right in.
Yeah, man.
We just came off the heels of the first ever rate cut in 4 years at the tune of 50 basis points. Now, they're also talking about further rate cuts. I think they've priced it, or not priced in, but they've hinted at 150 additional basis points of cuts between this year and next. Number one, what do you see the impact of that? Number two, do you actually think it'll be a lot steeper than that?
Well, I'll start with number two first. I mean, the Fed is full of shit, and you can't really take anything they say with a grain of salt. I mean, in the respect that, going all the way back to 2008 when Bernanke said the subprime crisis was contained, only to watch it blow up a week later. And the same thing is true here. There is no inflation, and then it's okay, it's only transitory, and well, then it's structural, then it's contained. And I mean, everything that they talk about just seems to be mistimed. They're talking about, in this case, lowering the federal funds rate by 50 basis points because of their dual mandate of not only fighting inflation, but also making sure there's full employment. Well, the numbers, as we know, that come out of the Bureau of Labor Statistics are fugazi. We know that. They went back and adjusted 818,000 jobs, but that doesn't take into account the couple 100,000 that they did during the year last year. So over 1 million jobs just vanished, and they touted every single month what great job they were doing on fighting, not only inflation, but making sure that the economy was strong. And look at the job creation. Not only was that fugazi coming out of a pandemic when everyone had lost their job or was mothballed, and now just the reacclimation into the system, those numbers should be parabolic, but they were off by 1 million jobs. And not only that, unemployment or employment numbers are a lagging indicator. So they would tell you that they're already a day late and a dollar short. Will they continue to do it? I don't know. I mean, when we talk about lowering the rates the way that they are, when stocks are trading at or near all-time highs, and at the same time we have our deficit out of control, creating 100,000 in debt a second, every second, 24/7, $1 trillion every 3 months, which took 2 years, 200 years to do the first time. We do it now in 3 months. We've redlined our national debt. And it's 35 trillion, which doesn't even take into account unfunded liabilities of Medicare and Medicaid and Social Security and government military pensions, all that kind of stuff. At the same time, the Fed is making these mandates based upon fake macroeconomic data, like the CPI or like the jobs numbers. And so when you talk about the CPI, I just saw an interview with John Williams of Shadow Stats. I think everyone should go to his website. And he'll tell you that inflation is 11%. Add 8 to their number, and that's what you get. That 11% would be based upon the way they used to calculate it. So inflation is, in essence, almost 4 times as high as they are telling us, yet they're touting 3% or just over 3.5%, right in that range, as where they're going to pivot. That's 60+% away from where they wanted to be at 2%. They haven't tackled inflation. They haven't beaten inflation. In fact, they've raised the red flag to inflation the way they always have, the way that all governments have, and in terms of normalizing their balance sheet or quantitatively tightening. You get rates up to 5% and the whole thing starts to blow up, just like it started to blow up in 2019 when they tried to raise rates and the subprime crisis happened, just like when the UK tried to normalize their balance sheet and raise rates. What happened? The pensions started to blow up, so they backed off, just like Japan tried to normalize their balance sheet and raise rates. What happened? The Nikkei collapsed, the Dow Jones collapsed, the markets in Singapore and South Korea collapsed. All of these markets collapsed. The carry trade, they backed off. So the point of it is that we've reached a point where we're trapped between inflation and austerity, and governments do what they always do, and that is to choose inflation. Now, the question becomes, what are the unintended consequences? Think about the yen carry trade for a moment. The yen carry trade blew up because rates on the yen went up a tiny bit and the yen strengthened. So wouldn't it be the same thing if the dollar loses ground and rates fall a little bit on the dollar? Because if you're lowering rates, the dollar should fall. And it's the exact same thing in reverse. Are there consequences lurking in the weeds that we don't see? What we are doing is reigniting the inflation engine. And I think that's why you see gold, which they tried to hit right after the announcement, but here it is, right back up to $2,600 an ounce, silver back to 31. Yeah, I think that it's predictable. The question is, do they continue to go down this road and lower rates? If we do, you might as well just put your head between your knees and kiss the dollar goodbye. Because if we continue to lower rates and to give in to inflation, yeah, it's over for the dollar on a long-term basis. And what's interesting, you can kind of see that in a microcosm. They lower rates, and what was the first thing that happened? The back end of the curve went up. So the yield on the 10-year treasury went up as they lowered rates on the front end. And that's just, I think, the world's way of saying, you guys are idiots, and we don't want your duration treasuries of any duration, because why would we? You're going to inflate the hell out of the currency. You're manipulating the treasury market, and in fact weaponizing the treasury market, and your country's a mess. Why do we want your treasuries? Tell us why we should buy it when you're lowering rates, yet you're creating inflation as if money is going out of style. These are very interesting times, to say the least. And then you talk about job numbers. 1.3 million Americans lost their jobs. Native-born Americans lost their jobs in the last year, replaced by 635,000 part-time jobs, mostly by immigrants. It's like 16 straight months in a row of increase in part-time jobs as full-time jobs are being shed. The ones with benefits, the ones with good paying jobs. The whole system is skewed. And if we listen to our glorious leaders telling us that everything is okay, look at the numbers coming out of the BLS, we should strip the L out of the BLS and call it bullshit for what it is. And so, yeah, I'm not a fan of it. I don't know where it will continue to go, but I will tell you, if history is any guideline, they will lower rates more. They will give in. That's what both candidates want. both candidates are talking about lower rates and a weak dollar, which is pretty much the worst possible thing you can do. And so, am I optimistic? No, in fact, not at all. I think that we are on a bumpy road that probably will only get bumpier.
Yeah, historically speaking, after you have these rate cuts, like take 2007 for example, they cut 50 basis points as their initial shot, and we know what happened afterwards, right? It
Yeah,
is it
it's the
is
same thing that's happened every
yeah,
single time that we've seen that. I mean, every single time you add into it an uninverting of the yield curve. Every single time since 1950, that's happened. Big recession every single time. And the same thing is true of the SAM rule. Claudia Sam, economist, who talked about the 3-month moving average of unemployment. If it goes up 50 basis points from its low point, you're in a recession. And that's predicted 9 straight recessions in a row with a 100% success rate. Well, guess what? We're up 53 basis points. So whether it be the uninverting of the yield curve, whether it be the SAM rule, or whether it be then raising rates, because most of what they're doing are lagging indicators. They're reacting to lagging indicators. Yeah, things are about to get dirty. You could see the market collapse. You could see a resumption of a fairly decent recession. It's not a good thing, to be honest with you, and the way that it's touted, and the political side of it is even more gross. Like, there's a meeting in November right after the election. They could wait until right after the election to do this. Why are they doing it now with a month and a half to go before the election? Is it political? It sure kind of stinks that way to me. So any way you look at it, it's not a good thing. It's not a good thing at all. In fact, I would argue it's the worst thing that we could do. And look, arguably they've been doing this since June. They just haven't talked about it because we've seen rates fall since June. How is it that the mortgage rates are the lowest they've been in like 2 years and they just started lowering rates? It's because they've been under the table buying bonds, creating money to buy bonds under the table, even though they just now announced it. And, again, the solution is simple and it's the opposite of what we're doing. But looking at Trump and Kamala, neither of them want to fix it. They both want lower rates. They both want a weaker currency. And these lower rates, they just fill or fulfill the corporate agenda. So, yeah, I would guess there probably will be more rates lowering, but is that a good thing? No, actually, I think it's probably the worst thing that can happen. It's not a solution. Easy money, not a solution. Think of the Cantillon effect. The Cantillon effect says the people and entities closest to the money benefit disproportionately. Well, look at that over the last few years. All that money created has made the hedge funds and the wealthy wealthier, where they can borrow money at next to nothing, plow it into assets that go straight up in value. Look at the Dow Jones, look at the price of gold, look at the price of everything, real estate, it's all higher. And by the time the money trickles down to the public, they suffer. The people who are suffering just to put food on the table, to pay their bills, and the things that we need, like tuition, like insurance, like food, like rent, they keep going higher. Yet we're gaslit by these idiots who want to actually try and tell us. I mean, which is the craziest thing of all. They're trying to tell us by lying about the stuff in the CPI that health insurance is actually down by 30% over the last year and down 15 or 20% over the last 5 years. Where are they getting this information? So yeah, I think that this is not good at all, Danny, and I think it's probably a precursor of much more to come.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. Speaking of precursors, in 2020, we saw gold make new all-time highs, much in the same way that it's doing now. And then a year later, we saw these huge inflation prints in the CPI. Is gold sniffing out more inflation? Is that what gold is telling us, or
Absolutely.
are the two not related? Okay, go ahead.
No, 100%. I mean, there is some truth in that, in the respect that the entities that are accumulating gold, largely the central banks, understand that holding dollars is not smart. that they will be eroded to inflation. And think of it from the standpoint of like Saudi Arabia. Okay, one of the newsworthy stories is that Saudi Arabia secretly purchased 160 tons of gold from Switzerland in the month of August, and they say secretly because they didn't make a public announcement or any disclosure of the change in their official reserves. Well, China's been doing this forever. Most of the countries who accumulate gold don't want to tell the world how much they own, or they'll say, we're not buying this month. And then it's exposed that they were lying because the import numbers that are required to be detailed by the banks, well, they say otherwise. And I knew that they were still buying. But the point of it is that think of it from your Saudi Arabia, right? So they've been loading up on gold and they're trying to do it quietly and covertly so as to not upset the West. What did they do a few weeks ago? They said, hey, we'll still take dollars, but we're not going to do it exclusively. We're going to not re-up the exclusivity of the petro deal that's 50 years old. So what that says to me is that the hegemony is dead, not the supremacy. So they're playing both sides. But okay, let's just say we're Saudi Arabia and the deal that we had for 50 years is we're going to sell oil to you through OPEC in dollars to the world. And then we'll take any excess and put them into treasuries. Well, the treasury side, you and I have covered extensively. I mean, they've been weaponized, right? We take Russia's 5 billion in treasuries because we don't like what they're doing, and we buy weapons from the military-industrial complex with it to give to the country they're in a war with, the Ukraine. That doesn't go over well to the rest of the world. We are supposed to be impartial. We're not, and by many people's estimation, we're more hypocritical and worse than anything Russia has done. I'm not going to debate that, but part of the world feels that. Okay, so the treasury market is not looked at the same way. And gold, which has doubled the performance of the treasury over the tenure, over the last 25 years, has no counterparty risk. Okay, fine. So we don't want treasuries anymore. We're going to buy gold with all the excess because it's better. The performance has no counterparty risk. Well, how about selling your oil for dollars? A dollar, which the Fed tells us is 2% inflation is what they're striving for, yet they're pivoting at 3.5%, 60% away. 3.5% inflation would tell you, using the rule of 70 seconds, you divide 3.5 into 72, which tells you how long before your principal doubles, and you have divided by every 20 years, the value is cut in half. Well, what if that number is wrong, as we know it is? And John Williams tells us, no, inflation, the way they used to calculate it, is 11%. So you take 72 divided by 11, and every 6.5 years, your money is cut in half, its value, or how long it takes for your principal to double. Do it backwards, it's cut in half. So every 6.5 years, that money that you're selling your oil, which is a finite supply, getting harder and harder to find, it's disappearing in nature. It's why do we want to sell it for dollars that are losing value to inflation, especially when the government lies about those metrics of inflation, totally lies about them. So there's an article that I read by a man named John Little, and I give him credit whenever I can. He's a hell of a researcher. He truly is. And he came out with this very interesting article, and I adjusted it to speak to where we are now. But with gold at $2,590 an ounce and oil at $70 a barrel, that's 37 barrels of oil for 1 ounce of gold. So you could take 25.90 for those 37 barrels, or you could take 1 ounce of gold. So look at it this way: a woman's purse that could hold 20 pounds, or a backpack you could run to the car with, that's about 290 ounces. That's worth 10,730 barrels of oil. If you're the Saudis, what do you want? Do you want 290 ounces of gold, which is appreciated by 9.9% per year for 25 years, outpacing every traditional asset, period, that the Bank of International Settlements has reclassified as the world's only other tier one asset, that the central banks are buying at a level the world has never seen before and repatriating it, including Saudi, who brought all their gold home from the Bank of England and the New York Fed, the two traditional places of safety that would give access to the hubs of trading, the LBMA and the COMEX? Or do you want gold? And I think that's what these entities are doing. They're saying, I don't want dollars anymore. They can be weaponized. They're being inflated. It's crap. I'd rather have gold, which has a much better track record, which can't be inflated, which can't be weaponized, and has been reclassified the world's only other tier one asset by the most powerful bank on the planet. The handwriting is right there. And you can see it. So it all goes back to this bullshit that we see coming out of the BLS, the lying to the world about inflation, about job creation, about all of these things. It's a lie, and I think much of the world understands this. Too bad the people in this country don't. Maybe the people watching you and I do, but yeah, this is something that's only going to get more and more acute, I think, as we see what the Fed will do, as they are trapped like a wild animal, literally between the forces of inflation and austerity. The only problem is austerity in this case means blowing up the whole system because they allowed it through 20 years of suppressed interest rates to become so leveraged that any chance to go back to any semblance of normal would mean having to blow up the system. You cannot have this system that we have right now without money creation. You cannot have a strong dollar without creating money to service the debt. And I think they understand that. So they're giving in and falling on the sword of inflation. So I guess we'll see what the next several weeks have in store for us. But I think this is just the beginning. I would expect it to get worse in terms not only of inflation, but also in terms of countries moving away from the dollar and choosing alternative assets as we lower interest rates, which is the worst possible thing we could be doing.
Yeah, and Andy, despite all of this, despite the growth in gold from 2,600 up, to 2,600 plus dollars, when I started interviewing you back in June. Gold was about 2,200, 2,300. It's only gone up since we started talking. I'm not saying it's because of this podcast, but I mean, I'm just pointing it out as a marker. But what's it going to take for normies to wake up? I mean, a lot of this buying, a lot of this growth in gold is precipitated by central bank buying, primarily from the East, as you well know. But what's it going to take for normies in retail to wake up and just,
An event,
realize that it's
an unpleasant event. We added 14,000 clients, Danny, in 45 days when Silicon and Signature failed, and they were bailed out illegally. Go back to the subcommittee meeting in the House where the Republican senator from Oklahoma said to Janet Yellen, "You just bailed these banks out illegally. They're not allowed to be bailed out anymore. They're supposed to be bailed in." Does that mean if a bank fails in Oklahoma, my constituents will be made whole? No, sir, she said. They'll be bailed in. It will take an uber majority vote of the FOMC, which is the Fed, the FDIC, myself, and the president. And that's why we bailed them out, because all of us thought it was too systemic. It would bring down the system. Well, yeah, I mean, this is a situation, and we added 14,000 clients and the banks were bailed out. What happens if one big bank gets bailed in? A lot of people don't even know what bail-in legislation is. It was written into law in the Dodd-Frank Act. That means you are an unsecured general creditor of the bank, i.e., last to be paid. And when you give them money that you call a deposit, it's not a deposit, it's an unsecured loan, and they promise to pay you back. Well, banks have had a 0% reserve requirement since COVID, and the Basel III regulations go into effect next month and say 4% is what they have to have. So a well-liquefied bank has only 4% of the assets that they have supposedly on deposit. It's not a good situation. And if one of these banks gets bailed in, maybe it's a big one like Bank of America. I mean, is there any reason that Warren Buffett keeps dumping his shares of Bank of America? I'm not sure. I'm just saying, what if they allowed Bank of America to be the sacrificial lamb and it's bailed in, and everyone says, my God, they lost everything, because anything over 250,000 FDIC limit is gone and used to go bail in the bank. And most people don't even know that the FDIC legislation or their mandate, they're already they're 140 billion in assets backing 18 trillion in deposits. You read the Dodd-Frank law, they have 4 years to pay you back. Their first job is to maintain an orderly process from the bank failing to making sure that the unsecured creditors are the last to be paid, and then to pay them out over 4 years. So when you talk about the chaos that could happen, you see one bank bail in, or how about the fact that even less people know about money market gating, which was also written in the Dodd-Frank Act, because when Lehman Brothers failed, they had a lot of the money market funds on their books, and everyone tried to yank their money. It's called breaking the buck. The money market goes upside down. You don't even get your principal back. Well, no. They said, you're gated. If we decide to gate you, if there's a problem again, you can't leave. You go down with the ship. All it would take would be one bank bail-in to incite a massive run on the banks, and people would be like, my goodness gracious, what are we going to do? Like that. That's how fast it would happen. So, unfortunately, I think the only way to wake up the normies, Danny, is to create an event that shakes them into realizing they've been lied to, because even people that are very well read just read the wrong shit, and they think they're well read, but they have no idea about these things, including bank bail-ins. I live in a golf community with very wealthy people, a lot of business owners, and I talk to them when we're sitting having a beer after a round of golf, and one guy owns a massive fruit importing company, had no idea about bank bail-ins, zero, has millions of dollars in a bank account with Truist Bank, whose balance sheet is horseshit, and yet he has zero idea. So all it would take would be for a bank like Truist, which is big down here in Southern Florida, to go upside down and be bailed in. And the consequence of that, the fallout of that, I think is huge. It would be something like that, in my opinion. And look, with the biggest election in our life, with two assassination attempts on Trump coming up in this election in 8 weeks or less, and the BRICS meeting next month, to think that there won't be something that wakes people up, I find to be hard to believe. But I guess we'll see. I hope not. I would rather people go blissfully into the dark and not have to worry about this. But I have a feeling there will be something that wakes people up, really wakes them up. And at that point, arguably it's too late, as the big money, the central banks, have spent the last 4 years positioning or repositioning into what is coming at subsidized prices. So as normal, the reason so few people ever succeed in investing is they follow the herd. They don't trust their gut, and they end up being led to slaughter like everybody else. So I hope that doesn't happen. But unfortunately, in my mind, that's the only way that people wake up to the reality, because the information that we're being given that most people trust, that's all lies. And all you have to do is spend a few minutes really researching and understanding it to understand that we are being gaslit to the nth degree.
Yeah, I mean, personally speaking, I've never felt comfortable in the crowd. I've always kind of been a contrarian at heart, and I know you're a contrarian as well. But how do normal people, how do you unplug from the herd mentality? How do you stop being, a part of the herd and become a contrarian in this day and age when it's just extremely difficult to?
Well, I would think the question is better answered by you than me, because I started this company with my father when I was 19 years old. So I have been outside the herd my whole life, basically, in the respect that, you know, most people never wanted to hear what I had to say. And that's why I never talked about it. Way back when, we used to write a newsletter before the internet. And I remember my dad, well, even after the internet, we used to write a daily newsletter. And I remember my father saying to me, um, hey, you need to learn to write. I won't be here forever. And the first article I wrote was called "My Wife Likes to Go to Parties." And it was about the fact that when my wife was 9 months pregnant in Minnesota, in the winter, it's not a pleasant place to be, I suppose, especially if you're 9 months pregnant when it's, below zero out. And I had built a house a year before, out in a town called Maple Grove, where I could see for miles. Within 6 months of moving in, I could hand a teaspoon of sugar to the townhomes that were being built behind me. And I said to my wife, "We're leaving. We're moving. We're leaving." It was 2004. I said, "We're leaving." And she said, "The hell we are. You want to get divorced? Then put a sign in the yard." I did. And I took my chances. I slept on the couch, biggest fight I ever been in with her. And I won that fight, and we sold our house. She's 9 months pregnant, and we rent. I told her it would only be a year. It was 6 years. And I put all my money into silver at $9 an ounce. And it was
Oh,
about
wow.
240,000 bucks of equity back then. And 6 years later, I sold it for $1 million or more at over $45 an ounce and built my dream house. But along the way, we went to a party, and a friend of mine who I played baseball with, he ended up going pro. And he was also, after his baseball career, was a pro poker player. And he looked like Mr. Clean, 6'4", 6'5", bald and big and loud. And we're at a party, and he's just ripping me. "Why would you ever rent? Are you stupid? There's so many good values out there. And your money you put in silver, you give it to me. I'll make more money playing poker than you will playing silver." And I just laughed and, "Todd, you're an idiot. Ha ha ha." And on the way home, my wife said, "Why didn't you say anything?" And I said, "Because do you like to be invited to parties?" Because it's not something people want to hear. No one wants to hear the message that you and I are talking about, Danny. And when you talk about, how did I become a contrarian? I've always been one, just because it's all I know. But someone like you, who has personally gone from whatever you were doing to now being on YouTube and talking about all of this stuff would be a better representation. To me, it's normal. To me, being a normie isn't normal. And, you know, I would just simply say that unfortunately, we live in a country, well, fortunately, we've all had the good fortune of living in a country where we're entitled to live better than our grandparents and our parents. That's our birthright. Where this might be the first generation in the last 4 or 5 where you could argue that the young ones are not living better than their parents did, where the cost of living is becoming so prohibitive, where the opportunities aren't as great as they once were. But I think most of us live in recency and normalcy bias. And so how does someone cross that Rubicon? Probably painfully, would be my guess. Um, the realization that the information we're getting is not real. It's hard because everyone works so hard and the world spins so fast and everyone's exhausted just trying to keep up. And the last thing most people want to do is come back and listen to you and I talking on a podcast or reading alternative media to try and figure out the truth, to which they don't even know is a lie. And that's just the system that we are brought into at this point. I think it's going to take a real jarring, an awakening for people to open their eyes to accept alternative thought and an unconventional thought. Don't mean to make such a long story about it, but I do think that's valid that, the people that are very well read are reading the wrong stuff. And I got a guy who lives across the street from me here. He's one of the biggest money managers in Southern Florida. And he always talks to me that, even if the market craters, I'll just buy more. He always says that to me. And it's worked. It's worked for him for a long time. And that's the benefit of being in this country as interest rates have fallen and the supporting of Wall Street has been primary goal number one. But if that changes and you get that type of mentality where we'll just keep buying on the way down, you end up literally eviscerating yourself. Is it going to take some sort of an event? Yeah, I believe it is. Because after 34 years of doing this, it's a rare bird like you who steps out from the crowd and says, no, this isn't right. And not only that, has the courage to do what you are doing. Because I know that there are friends of you or your families that don't like what you're saying, I'm sure. And you wouldn't even bring it up at dinner. You would just talk about other things. Well, I have that too. I'm the guy that goes to Thanksgiving and my wife says, not a damn word, not a damn word this time. I would like to finish dinner before we get thrown out. And that's the reality of it. You try and help people and open their eyes, and you're just a conspiracy theorist and a tinfoil hat nut job. Yet everything I have said publicly, by and large, since 2019 has come true. Do I take joy in that? No, actually, I'm kind of frightened by it. It's when I'm sitting alone late at night thinking like, how the hell did I get that right? I don't even know, to be honest with you. But I have been right. I have been proven right. And the worst part about it all is that you wouldn't even know I was proven right just by reading the mainstream or listening to the mainstream. You have to take a step back and look and say, yeah, that is right. It has happened. It is fact. It is real. It is law. I don't know where I'm going with this other than to say I don't think most people have a snowball's chance of hell in walking away from this. In fact, he or she who loses least in what's coming will win. And that's all of us. We're all going to lose in this, whatever this is, losing the world reserve standard, letting the system blow up, moving to a new system of digital backed currencies or whatever it is. He or she who loses least wins. And God bless guys like you who have had the courage and the ability to step out from the herd. This is why there is an entire theory of investing, wave theory, Elliott wave, Kondratiev wave, all based on human emotions. And there are very few people who can separate emotions and do things intellectually and try and separate their emotions from reality. And I admire you for being able to do that. I think your path was harder than mine. I just was always brought up this way, for most of my life. You had to learn the hard way, however you got here. But you are a better person to answer that question than me because, this is something I don't think 10 years ago you sought out to do this. I've been doing this since I was 19.
Oh, wow. Yeah, definitely a big origin story, leading up to, where you're at now, Andy. I mean, a lot of it, I think, also has to do with, just obviously nurture.
But how
People,
did you get here, Danny? I mean, what was it that woke you up? What was it that made you say, everything that I know is not real?
it actually was Ron Paul back in, I think, 2012. I think he was the big catalyst for me. So I started paying attention to his campaign, and I was a big anti-war guy, and I saw what was happening, and I mean, people like me wanted Obama to come in to end the wars, and we ended up having more wars. And then Ron Paul came into the scene, and he was a legit anti-war guy, and he started, talking about, the uniparty and all of this continuity of government, from one party to the next, how things really don't change. I learned about the Federal Reserve through him. And that was really where it started with me, was about, 2012 or so. Preacher of Jekyll Island. I've interviewed G. Edward Griffin, like we talked about it before we hit record. He was another big person that I listened to back then. But yeah, it is a process,
It
and
is. And it is.
you
And it's a
genuinely have
hard
to be a
one.
seeker of truth. Like, you have to want, because most people do not want to hear the truth.
That's why I said you want to go to a party. If I were to sit there and rip this guy back, who was my friend, he is my friend. I could have, but everyone would have been like, let's go upstairs. I don't want to listen to this shit anymore. And they'd be gone. Who wants to hear that at a party? Who wants to hear it in general? And that's the difference between what we do and what a money manager does. A money manager spouts green shoots and optimism eternal. And we say, no, there's flaws in that argument. And that's why people don't want to hear it. I am generally someone who is an optimist, but it's hard to be optimistic when you see things around you that, look, there's a fine line between pessimism and realism these days. That I can tell you. And I don't know, Danny, I just have great admiration for someone like yourself who can rise up on his own and see this for what it is, and then do an even tougher thing, and that is to try and tell people about it the way that you are. That's why I'm so honored to be here with you. I mean that sincerely, because you represent the pimple on the elephant's rear end. Most people align with the elephant. They're not the person who is away from the crowd, away from the herd, away from the mentality that is pervasive, that is entrenched in recency bias. And you take a look around you and you can see these things are changing. That I'm quite sure of.
So anything else you want to talk about before we wrap up?
No, I have my first interview now that I'm doing with G. Edward Griffin. That's why I have the creature from Jekyll Island next to me in 4 minutes. So I think it's best that I probably go. Just know how much I appreciate you, Danny, and admire what you've done and how fast you've risen up the ranks of notoriety. That's because you're a real person saying real things. I think that's the way it comes across. You don't come across as being an elitist. You come across someone who cares, and I think that's what attracted me about being on your show from day one. I think that's why your numbers are growing so much. People like what you have to say. I'm honored to be here. Anyone wants any information, just make sure they send us an email at info@milesfranklin. Capital Cosm sent me. If you just want our price list, which will be as good or better than anyone in the country, let us know. We'll give that to you with no obligation. If you want to be contacted in any way about any questions you've heard here or any other questions that you haven't answered, that you haven't heard but you want to know, email at info@milesfranklin.com. Ask those questions. Ask for the price list. Put your phone number down. We'll contact you. And I look forward to picking up where we left off. Danny, I think the next 6 to 8 weeks will be the craziest of our lives. So I'm sure there'll be lots to talk about, and I'm honored to have the opportunity to come on and talk with you about it. So until next time, I'll look forward to picking up where we left off.
Yeah, looking forward to it, Andy. Thanks so much for coming on. And if you guys enjoyed this content, give us a like, subscribe to the channel down below. Also, check out our Substack for the full interview. The conversation continues on Substack. So be sure to check that out. And with all that said, thank you guys so much for watching, and I'll catch you in the next episode. Bye, y'all.
If you are holding dollars, you are 100% destined to go broke, period. And again, does it benefit the elite? Absolutely. It makes their asset prices go parabolic, but in a currency that's dying. And that's what's different this time, is that all of the conventional thought, monetary policy, messing with interest rates and whatnot in a stable environment, well, that's an interesting thought experiment. In an environment where the dollar is being forsaken already and looked at very differently, and